Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Mumtaz Muhammad Pisal, Matric number 118249. For this video, we're going to be evaluating Dps Resources Berhad based on cancelling criteria. For DPS background, DPS is a company that specializes in the consumer product, penny stock and the property sector. The main activity includes wood product manufacturing, furniture and related product manufacturing, and management of the company and enterprise. Now, let's evaluate DPS company based on cancelling criteria. So the first criteria is current earnings. So generally, investors look for EPS growth at over 20%. The higher the EPS, the more profit generated from the industry averages. For DPS company, the latest quarterly report shows a positive net income for the past 2 years. Therefore, DPS score 1 point. Second criteria, annual earnings. So according to William J. O'Neill, an ideal company must have over 25% of annual EPS growth for the past 5 years and ROE over 17%. In the case of DPS Resources Berhad, the annual growth doesn't change much except for 2020 and 2021, where the company showed a tremendous growth in the profit for the 2020 and 2021. Third is news. So news here could be change in management or new trend in the industry. So news are crucial for investors because it causes a short-term excitement which increases the stock price. However, not all news are relevant. Compared to Damansara company, DPS Resources have 2 news that could affect the stock price. First, regarding the amendment of EPS increased to 0.58%, and second, regarding the acquisition of freehold land. Next is supply and demand. In theory, strong demand from investors could push the stock price up. The stock value raised when the daily volume traded is higher compared to the average volume traded. Similar to Damansara Holdings Berhad, DPS Resources daily volume traded is also lesser than average volume traded. So, DPS also scores 0 point. Criteria number 5, leader or laggard. To know whether a company is leader or laggard, the relative price strength is used to determine a company's position in a specific industry. From the scale of 1 to 99, the top score company usually score between 80 and above. Based on the graph, Damansara company is considered as a leader company because the price is higher compared to the DPS Resources Berhad. Criteria number 6, institutional investors. In Malaysia, we have many institutional investors such as Khazanah Nasional Berhad and Lembaga Tabung Haji. This company is what we call SHARP. So with the presence of SHARP, usually a company's stock price will grow higher since this company have more resources to invest in the market. Similar to Damansara Holdings Berhad, DPS Resources also is not supported by the institutional investors. The final criteria is market direction. So market direction falls under technical analysis category. The strategy suggests to make new purchases only when market is in uptrend and take a differentiation when the market show a weak signal. As we can see in the graph, DPS Resources has a little chance on going upwards in the market in the short-term periods since they are currently facing a downtrend situation. In conclusion, DPS Resources managed to score 3 out of 7 using the cancelling strategy with the weighted average of 60 out of 100. Therefore, it is still advisable for the investor to avoid purchase the DPS stocks to avoid further losses in the future. That's all for me. Thank you.